if they've really honed in on what a good investment property is, they should be able to look at that property and go, oh my gosh, my client that I'm showing property to doesn't want that property, but I know that's just an unbelievably good investment property, and I'm going to take that for myself, or I'm going to take that back to the brokerage, and we're going to analyze that, and then we help the agent basically turn that into an investment property.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steve, we've had big things going on in the office here recently, right? Had a little meetup.
Well, you know, we have our meetups once a month, and you always learn things. As much as you're out in the market, there's basics that you forget. And so we had an interesting talk by Rob Turner, who used to be the property appraiser, and he just gave examples. People should remember that you can go and you can contest assessed values and dramatically reduce your property taxes, provided you know what you're doing and also work within the right timelines. You have to, there's just a certain period that you can do it during the
and different methods. People assume it's all sales value. It's not necessarily true. It's all, it's not just all comparable methods. They use other appraisal methods to determine value. And it's not, I'm not going to tell you it's easy to contest your assessed value, but it certainly is. It is definitely a way and a method to be able to check to make sure. And if they're not valuing your property properly, it's certainly a way to lower your taxes. One of our most, if not our most listened to episodes was with Todd Jones, who
I think that was one of our first ones, right? Which was quite a few years ago.
Yeah, it was a few years ago. A few
less. You're getting older, Eric.
A few more pounds too. Less hair, more gray, and more pounds. But yeah, I mean, if you want to go back and listen, it's one of the earlier ones. Todd Jones joined us 4 or 5 years ago and talked to us about that. If you want to go back and listen to that episode, I'd highly encourage you. But there's definitely ways to do that and lower those taxes, and it always feels good when you achieve that. Nobody likes to pay the tax man, Stephen.
Hey, listen, it's better in your pocket.
Yeah, no doubt. You know, guys, if you haven't had an opportunity, we'd love for you to go by and give us a review on the Google iTunes or the Google Play Store, either one. It's a challenge each and every week to find great guests for you guys, and it certainly helps us to show those guests that you listen and it matters that they invest their time with us and come on the show. So if you're not done that, we really would appreciate you doing so. And
I have a request on that, because we get lots of reviews and we get lots of 5 stars, but it's really more helpful for our guests if they could just see something written like Steven's so good and Eric's so bad, and the show's great, and then there's something for them to consider, and they'll maybe be a guest on the show, and we can all benefit from that.
Steven, all those 5 stars.
5 stars Steven was on that.
Those are the ones, and I deleted the text on that. So, no, seriously, guys, we do appreciate when you invest your time and do that for us. It certainly helps us with acquiring additional guests. And today we've got somebody, we're going to talk about something we haven't talked about in a while, is the Orlando market. We haven't had a guest from Orlando in a while, so it's going to be good to have somebody from Orlando talking to us about what's happening, really all the way from the Atlantic Ocean into Lake County. So everything sort of that corridor between Lake and Volusia counties. But Stephen, let's go ahead and get rolling in with the guest.
Let's do it. Today we have with us Greg Bond from Orlando. Greg is a successful business owner. He owns the Property Management Guys and also Realty 320. He is also an experienced investor who has been active in single-family homes, self-storage, and assisted living, and has real estate holdings in several states and countries. Greg, welcome to the Invest Florida show.
Thank you for having me, Eric.
Hey, Greg, really appreciate you coming on the show and investing your time with us. It's not often that we get somebody from Orlando, so we're excited to hear about what's going on in the market over there and some of the things you're working on. Why don't you give us first a 30,000-foot view of how you got into the business and why real estate and all that good sort of stuff?
Yeah, I kind of, it was a roundabout way, probably like most people. I went to a seminar at our church called Crown Ministries, and the gentleman there said, it was kind of a precursor to Dave Ramsey, same sort of thing. And he said, your house is your best investment. And so I thought to myself, if your house is your best investment, why isn't 2 or 10 or 20 or 30 houses an even better investment? And that kind of set me on the mindset of buying single family homes and renting them out. So
it's kind of interesting. Like, I've heard stories before how people went to church and then they saw the light, and you did.
Yeah. Certainly did.
So tell us about what's going on in Orlando. Now, you've been in the market since when was your first investment property that you bought?
First investment property was 1988. And then we've done a host of them since then. But that was the meager beginnings, was the first one in 88. And I guess we've bought and sold and rehabbed about 250 properties since then. So the over 250.
And so you've seen a lot of cycles, a lot of ups and downs.
A lot of ups and downs. I think you'll learn more in the down cycles than the up cycles. It's certainly a growing experience to go through one of those cycles and experience everything that happens during a down cycle, all the things that you don't expect to happen that pop up. So,
have you learned to kind of get a feeling when you're in a cycle and when you start to get nervous? As it's like, what happened, for instance, in the early 2000s when the market was really going high, and how did you approach it then?
Well, I was buying a lot of property back then, but we were mainly buying VA foreclosures, and they had a great program set up that included financing. So once that program went away, I stopped buying about 2001, and then basically I wasn't buying through the whole upward cycle until the crash in 2008-9 timeframe.
Wow!
So it's that time that I jumped back in. So I hit the market just right. I wish I could say I planned it that way. It just kind of happened. And sometimes it's better to be lucky than smart. So
yeah, it's funny. It's you were either in it, and you got your face taken off, or you weren't. And the ones that weren't, they all say the same thing as you. I don't think we've had many on here that said, "Yeah, I saw that come in." It was always some sort of like, "Well, I got a divorce, and I was worried about that. I didn't buy homes, or I." We decided I was going to travel for a while, and I, sold all my property, and then of course you had a VA program that sort of ran out on you in 2001 and missed a lot of the up, but you missed all the really horrifically bad downside.
Right.
Yeah.
It was amazing when I jumped back in 2009, and prices were half of what I had been paying in the 90s, and I just thought, this is just a crazy market. It's unbelievable. I just want to buy as much as I can, but I couldn't get enough cash, so I began buying and selling to investors. Started out as friends and family, buying a few properties, and then as I began getting more and more deals, and these deals were just so good, it was mind-boggling to think, the return on investment. You were looking at buying the cheapest property I bought was about $15,000, and I was renting it out at $750 a month, and I thought, man, I can do this forever. This is just wonderful.
So you started a property. You started a property management at that time, right?
Yeah, so that's so I had a lot of my own. I'd been managing my own property, but then as that began to scale and I began to sell to other investors, then I started a property management company that pretty much I've grown organically. So every property that I had managed up until about a year ago was one that I had rehabbed myself, put a tenant in, and then sold to an investor. So now, since we've got the network set up and all the infrastructure set up for property management, now we're offering our services to other people around basically our 5-county area. We don't go much outside the greater Orlando area.
And are you still rehabbing and selling, or are you building a portfolio?
No, we're still rehabbing and selling. Basically the same model. There's a bunch of investors. I've been lucky enough to make the acquaintance of some other podcasters around, and they promote me as a turnkey provider for Orlando. So then, somebody will hear the podcast and call up and say, hey, I'd like to buy a property in the greater Orlando area. And we typically have, 5 to 10 properties available. They'll pick one out. And it's surprising to me how many people just see the numbers, look at some pictures, see a copy of the lease, and they buy the property sight unseen. Mm-hmm. So I would say probably 80% of my clientele has never been to their property. And we manage it for them, and on the 10th of each month, they get a check from us.
How are you, tell me about, when you're looking at a deal, what do you want to see out of it? Do you use a percentage, I want 1% of the value or 2% of the value for, I don't think anybody's doing 2% deals anymore, or rent per purchase price, or what kind of bogeys do you use to try to, as a rule of thumb?
Yeah, as a rule of thumb, everybody's looking for that 1%. That's harder and harder to get these days. What we did was we set out and said we're going to sell our properties based on a percentage of rent. So we started out at 100 times rent. We're up now to 110 times rent is what we sell to an investor for. So in most cases, that gives that investor anywhere between $5,000 and $15,000 from the appraised value, or less than the appraised value. So if we're selling a property at $115,000, that property generally is going to appraise at someplace between $120,000 and $130,000. And so the investor immediately has equity in that property, and we're just doing it as a percentage of the rent. So that's been our model, and it seemed to work well for us.
What's the price level of the houses that you're going after when you do that?
Well, the sweet spots tends to be someplace between $75,000 and $175,000. Once you get past that $175,000 mark, it's really hard to get close to that 1% or 1.1 times rent, just because you can't $300,000 house you can't get $3,000 a month rent for. So it seems like that sweet spot is definitely 75 to 175, where we can kind of maintain those ratios.
How about condos, Greg? You do condos too, or just a freestanding single family?
No, pretty much I've just done single family homes. Take a look at some of those condos, and with the association fees, that's I always refer to it as a mortgage that doesn't go away.
Right.
So it's just that extra cost. You just can't tend to get the margins and the percentages to a place where it makes sense for an investor. Gotcha.
So let's talk about, you're still finding deals. Deals are, everybody's out, turning the streets, trying to make things happen, and deals are hard to come by. So let's talk about what's happening in your 5-county area. What is that? I mean, I suppose you're Orange, Seminole. Are you in Volusia? What are the 5 counties that you're in?
Yep. Orange, Seminole, Volusia, Lake, and Osceola.
Gotcha.
So we're just looking to branch out into Brevard with all of the growth and opportunities that are going on in Brevard. That'll probably be our next market, is to take a plunge over to Brevard County.
So what's going on in the market right now? I mean, what are you finding?
Oh, crazy opportunities. I mean, people say there's no good deals out there, and all that I'm finding is good deals. It's true they are harder and harder to come by. 2009 through 2014, it was like picking cherries off a tree, and now it takes a bit more. But if you have the right marketing efforts going on, I think there's still tremendous deals out there.
So how do you actually find the properties? Are you sending out postcards, or
yellow letters, or
knocking on doors?
All of the above. That's one of the reasons why we started our brokerage, Realty 320, is basically it was to generate leads through agents, because we found a lot of agents wanted to be investors, but they didn't have the knowledge base or didn't know what they were looking for. So we're helping them identify what makes a good investment property. And ultimately, an agent should be their own best customer. Over the course of a year, as they're showing property, they should come across a couple properties that they just look at that. If they've really honed in on what a good investment property is, they should be able to look at that property and go, oh my gosh, my client that I'm showing property to doesn't want that property, but I know that's just an unbelievably good investment property, and I'm going to take that for myself, or I'm going to take that back to the brokerage, and we're going to analyze that, and then we help the agent basically turn that into an investment property, and we determine the exit strategy and what we're going to do with that property, and then basically we take it over and run it through. So the agent gets to follow us through the steps that we go through. And once they've done that a couple times with us, then they get the sense of what, now they got some experience behind them, and they can actually do one themselves. So,
and then you typically manage the properties for them?
Yes, most of the time we manage the properties. A lot of them tend to buy in their IRA. So in a self-directed IRA environment, they can't manage their own properties. So we end up doing a lot of management for IRA properties, self-directed IRA.
So have you found the self-directed IRAs to be a good vehicle for investors?
Wonderful. I mean, it's been probably, in my over 30 years in real estate, it's probably one of the most significant things that I found, and I couldn't believe I didn't start until 2009. And I just kind of shake my head and go, how did I not know about this opportunity before 2009? It is just a tremendous vehicle to create wealth, tax-free wealth, pass wealth on to the next generation. I mean, there's so many positives to it. When I first started, I didn't think it was legal. It took me quite a while to get going because I researched it to the point that it was the analysis of paralysis, and I couldn't pull the trigger. Finally, I did after I read the IRS regs on it myself, and I said, "Wow, this is real. This is legal, and it's such an opportunity that I can't believe everybody isn't doing it."
Tell us about the 5-county market there, Greg. Like where are there markets that you look at and you say, well, this is maybe slowed down a little bit. We're struggling in this county, but we're doing really well in this county. Like, tell us a little bit about your market.
Well, it's as you might imagine, with the hot spots being 75 to 175,000, pretty much is on the outskirts of Orlando. Anything downtown is too pricey. I'd love to do stuff in Lake Nona with expansive growth there, but it's just the market isn't available at the price ranges that we need. So we're looking. A lot of our stuff is in Lake County, in West Volusia County, in Sanford, kind of in the outlying areas where we can get that price range, get the margins and the ratios right for an investment property. But there's tremendous growth. We've had over 60,000 people move in the greater Orlando area. I mean, we're talking over 1,500 a week, and it just is continuing to grow and grow and grow. A lot of our clientele, surprisingly enough, seem to be retirees. So they sell their property up north. They've owned a property for 40 or 50 years up north. They sell it. They get a great sale price up north now as prices have recovered, and they come down here and they say, you know what, we don't know if we want to buy another house and be tied down to another house. Let's rent for a while. And those type of renters I absolutely love. They've taken care of a house. They know what it takes to maintain a house. Their expectations are wonderful, and they're just all around great people. So I love renting to retirees. And it seems to be a bigger part of the market down here, with 75,000 baby boomers, 10,000 a day turning 65 or older, and 21.6% of those say they want to move and retire to the state of Florida. So just this mass exodus and demographic shift from the Midwest and the Northeast down to a warmer climate. So it's for the foreseeable future, I think Orlando's market is very, very hot, and it will continue to grow and grow.
And what about the other areas? I mean, you're in Volusia, and you said you talk about Brevard. What do you see in Brevard right now that kind of gets you excited?
Oh, just all the tremendous growth with the shuttle going back up, and all the space stuff happening, and defense contractors. It just seems like that's taken off. Elon Musk. I own a Tesla. I love talking Tesla and anything Tesla, including their rocket program, and I have no doubt in my mind he will make it to Mars. So,
well, he's got some high flying ideas, and then you also diversified a little bit into other types of assets, didn't you? Tell us just. We can't go into too much depth, but just give us an overview of why you went in that direction and what assets you targeted.
Yeah, so you've been single family this whole time, and now you're looking at other stuff.
Right. I just got so highly leveraged in single family. I was holding so many that I said, hey, I'd like to, like anything else, you want to diversify. So I said, what can I diversify into? And I really love real estate. I wanted to stay within that asset class, but I wanted to diversify within the asset class. So I set about looking for something that would do well in a downturn. So I own some retail space. I own a warehouse. I own some office space. So I was fairly familiar with the commercial side. But what I started looking at, I started looking at multifamily. I started looking at trailer parks, and kind of two things that I landed on were self-storage, because it's the chances of all of your clients leaving at the same time when you've got 2, 3, 4, 500 units is next to nil. And it's one thing that if there ever is a downturn, it does well in an upturn because everybody's got lots of stuff they need to store. And in a downturn, when people are losing their homes or leaving their larger homes, a lot of time that extra furniture, they say, let's go ahead and store it. And so it does good in an upturn and even better in a downturn. So that was kind of my reasoning for self-storage. We bought 2 facilities now and looking to purchase some more. We've got a third one we're looking at, and hopefully we'll have that under contract in the next couple months. And then self-storage or assisted living was kind of the same thing. I got involved with a gentleman named Gene Garino. I don't know if you guys have ever heard of Gene, residential assisted living. And that kind of led me down into the assisted living business. And Gene was telling a story on how, I asked him how he did in the downturn. And I lost, 20 to 30% of my client base in my rental properties. And asked Gene how he did, and he said he didn't lose a penny. And said that it's because somebody that's in an assisted living type facility, they've either saved for their whole life and they have their retirement that's helping pay for that, or they have children that are helping pay for that assisted living bill on a monthly basis. And that's the first thing, that's a top priority for the families, to make sure that mom or dad's assisted living bill is paid. So I took a look at that and said, I like being at the top of the heap and the first one to get paid. And so I said, let's do some assisted living. And we've got a nice facility going up over in Eustis. It'll be a 97-bed facility. And oddly enough, as we got moving forward with it, we learned that it was in an opportunity zone. So it was
Was that by accident, or you targeted?
No, totally by accident. We bought the property before the job acts, and so it just actually we didn't even realize it was. We were talking with one of our investors who had knowledge about opportunity zones, and he asked us. He said, "Hey, have you guys checked to see if that's in an opportunity zone?" So one of our investors had been knowledgeable about opportunity zones and had known that there was a opportunity zone in the city of Eustis, and he just posed the question to us, is your property in an opportunity zone? And we said, what's that? That was February of this year. And once we looked and found out that it was in an opportunity zone, that really sparked our interest to educate ourselves on opportunity zones and all that meant. And so we went out to the first opportunity zone conference out in Las Vegas, and was filled with accountants and attorneys. And we learned more than we thought possible about opportunity zones. And it's just a tremendous opportunity that really everybody should be looking at. I think it's going to be, once the general public gets a sense for really what it can do and what it means, I think they're going to take off and just be wildly popular.
Yeah, there's a lot of tax advantages with opportunity zones. We've actually done a couple of episodes on them, and I would encourage our listeners to listen to some of the benefits of the opportunity zones. It's probably going to be outside of the scope for this podcast, but there's plenty of information that's available. We encourage you to look there. Also look on Google, but suffice to say that there are tremendous opportunities, tax opportunities, savings and benefits. And if you're interested in opportunity zones, you might want to take a peek at that, because it's definitely something that can earn a little juice on the return, no doubt about it.
Opportunity zones is almost too good to be true. You look at it and you go, wow, is this really legal? And, oddly enough, it is.
Tell us about some of the bogeys and the data points you look for in ALF, from a 30,000 foot level. Like, why did ALFs jump out at you as something that was that was going to work, and then what are the sort of data points that you want to see to make something work? Because you're building a ground up here. It's a little different than acquiring something.
Yeah, it kind of took on a life of its own. Again, what data points I'm looking at, I'm just following the demographic trends. When you look at what's happening and the number of retirees coming to the state, you'd say, what's going to happen over the next 25 years as that population ages? I mean, there's going to be more and more need for assisted living type facilities. So we've got the assisted living, plus we've got 24 beds of memory care. And again, I just fully expect that that's going to be a larger and larger need as the demographic shift and retirees come to the state of Florida.
Now, you guys aren't operating these, correct?
No. It's pretty much just like if you ask me what my biggest mistake was, I would say managing my own properties early on, because I thought I was saving money. In actuality, I was making so many mistakes and losing so much money. I would have been much better off had I hired a professional property manager to manage my properties and used my time to go find other properties. It's kind of the same thing with assisted living. If you can get to a certain scale, you can hire an operator, and then it becomes that operator is pretty much your property manager, and they handle all aspects of that facility, and I just become an investor.
So are you doing the same in your self-storage? Are you branding it with one of the major Cube Smart or Extra Space or one of those guys, or are you managing them?
No, most of the properties that we're buying have existing managers. They're not one of the bigger brands. So we're buying in the tertiary markets, and it seems places right now that the bigger boys aren't playing. And so the markets are still providing an unbelievable return. So those tend to be the last property that we purchased was in Frostproof, Florida. Frostproof is a little city in southern Polk County. And again, some of these smaller markets are just are wonderful opportunities for somebody looking to get into this self-storage business.
So talk to us a little bit about the numbers on the ALF. I mean, how do you try to measure it by door? You try to say, well, I need to get X number of a daily rate of X, and I'm willing to pay Y number for the door, or how does that work, Greg?
Yeah, it's putting it all together. It's certainly that's part of it. But it's you look at what all of you got to do a market study and see what all the competitors are charging in the area to kind of get a feel for what you can do, see what their occupancy rate is, to see just what type of need is in the particular area you're looking at. So there's a lot of things to go into it to actually determine whether it's going to make a good facility or not. So in our particular case, we just happened to hit it right. I was going to initially do just a smaller facility and rehab. It was about a 10,000 square foot medical facility that was there. I was going to rehab that facility and turn it into 30 to 40 beds. And once I got my architect and my GC and got figures back on the remodel of that facility, I about dropped over because it was more than it would cost to build a brand new facility. So at that point, that's when we started going, this doesn't make any sense. Why should we rehab an existing facility when we can knock it down and build brand new cheaper than we can actually rehab the existing facility, which seems a bit strange, but nonetheless, that's the world in which we live right now. You can build cheaper than you can rehab in some cases.
Okay, well, Greg, it's been fascinating talking to you about the strategies that you're doing. If people want to reach you about property management or anything else related to investing,
or deals or anything else,
how can they reach you?
Yeah. My email address is gregbond@thepropertymanagerguys.com. You can also shorten that to gregbond@tpmguys.com. And my phone number is 407-252-9658.
Awesome. Well, Greg, thanks very much for being with us today. And we look forward to talking to you soon, and love to hear about your ALF as it gets completed and filled.
Thank you so much for having me. Great talking to you.
All right, Greg, thank you.
Bye-bye.
And that was Greg Bond talking to us about the Orlando market and what he's got going on with his property management business. Stephen, what were your takeaways?
Well, Greg's using just basic common sense and some definite strategies. Everybody talks how the market's got so much harder, and it has, but he's still finding good deals by doing marketing strategies. But he's also going off on other avenues where he finds that there's a lot of capital and upside opportunity. He believes in IRAs, and we've spoken about that before on other episodes. He's going to outlying areas to get better margins, and he mentioned renting to retirees. I think he mentioned 10,000 people a day reaching 65 years old, and a lot of them are coming to Florida, and it's a ripe market. So he's very smart about it, and he's very strategic in the way he approaches his investing.
Greg was a great guest. We've got a lot of great guests that have come down the pipe at the Invest Florida show. Stephen, where can our listeners find out more?
Only one place, www.investfloridashow.com. But better yet, go to the mobile store and get the app on your phone, and you can listen while you're mobile or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. Until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.